Good afternoon. It's McCollum on Business. I'm Stephen McCollum, and for the next 30 minutes or so, I'm going to get you updated on what's happening all around the business side of things here in the world. And we'll look at the market watch, stocks we're paying attention to, and lots of local and national stories that you need to know. And finally, somebody else is putting some pressure on Russia in terms of sanctions, besides just the United States trying to put the pressure on so Russia and that Ukraine war can kind of get settled here coming up. We have that coming up for you. But first, let's get right into that market watch. Yesterday, we had the big sell-off happening. Well, today, the sell-off is ended here, right? As basically the rebound is here, right? The Dow Jones is up 243 points right now. 46,773. The S&P 500's up 43 points to 6743. The Nasdaq's up 230 points to 22,971. Then that Russell 2K, that small cap index, well, it's 33 points up right now. 2488 is where that is standing. Even Bitcoin getting back in the rebound mode, back up to that 111,262. After dropping down to that 107,000 yesterday, as everything was a sell-off mode yesterday out there. And stocks we're paying attention to right now, we got four of them for you, three in one industry. That we've got some updates here on that. But first of all, Ford Motor Company, well, they're going to report after the bell today. They're the big one everybody's waiting on here. The one yesterday everybody was waiting on, Tesla out there. And Tesla's the first stock we're going to look at. It's up 1.56% right now. They reported third quarter earnings numbers after the bell. Well, they did post double-digit revenue increases for the period that they reported on. It did miss the earnings estimates. They even saw their capital expenditures jump big as well. So some mixed messages, some mixed news there. For Tesla, I can tell you this, earlier today, it was down 1 point. When I looked at it, came back for the showtime, and it's up 1.60%. So there has been some people jumping in on Tesla here as the trading day has gone on. As you see on your graph there on your screen, that steady increase there by Tesla. Now we're going to look at some quantum computing stocks. First one we're going to look at, Rigetti Computing, is what we're going to look at. This could be so there is a downhill trend here, which doesn't surprise me, with some updated information. Basically, earlier today, well, quantum computing shares were all up. This stock was up over 11% at one point today. The Wall Street Journal reported this morning that the Trump administration is in talks to acquire equity stakes in several of these quantum computing companies. This is where they get funding, and in basically return for the government funding, the government gets equity stakes. Those are the negotiations, just like the government did with Intel, MP Materials, etc. Well, the stocks are coming down. Rigetti Computing's the first one here, up 7.46% right now. IonQ is the next one we're going to look at. It was up over 10% earlier today. Well, it's come down to 5.73%. It's come down for a specific reason, and I'll get to that in just a minute. The last stock in this one, we're going to look at quantum computing. They were up over 8% earlier today, down right now to 6.05% up here. So they've all regressed here as the day has gone on. What has changed from earlier when they were all rising up? Well, the U.S. government actually came out and refuted that Wall Street Journal reporting. For instance, CNBC, a Commerce Department official, did tell CNBC about 20 minutes ago or so that the U.S. government is actually not in talks with any quantum computing companies to take the equity stakes in their companies in exchange for that federal funding. So they were all way up, 11%, 10%, 8%, all come back a little bit today. They're all still positive, but they all came back from those numbers after this Commerce Department official. I did see that was the CNBC reporting. I did see Fox Business also had a story up where they were specifically told by a source in the government that the same thing. So they're getting out there to all these media companies and saying the U.S. government is not in talks with these companies. And that's why you're seeing the numbers come down here as the day goes on. So, interesting thing happening in the quantum computing stocks world here today from earlier today to right before showtime to showtime now. It's like, wow, big movement here in this industry so far. Now, later on, when we come back and look at the stocks, well, we're going to look at Beyond Meat again today. Boy, has it had a week. We're going to look at West Pharmaceutical Services. Now, if you don't know what they make medical equipment, specifically some of the components that you need for injector pens for those GLP-1 medications. So we're going to look at West Pharmaceutical Services. And then Las Vegas Sands is one we're going to look at. Companies all over the place are reporting. We could spend an hour going through reporting reports and who's out there. A lot of the airlines have reported. You know, we had Southwest yesterday, American Airlines. So we try to pick the ones that are interesting and not just whether they hit or miss numbers. Out there, I could tell you Southwest was down because they missed their numbers, but does expect a big gain coming up. American Airlines was up. They hit their numbers yesterday and expect growth to continue. So it's just basic numbers for a lot of these companies. So we just try to find the interesting ones that we want to pay attention to out there, and we'll come and do that at our next Market Watch. But now let's get into those national stories that you need to know. And quite frankly, right here in the midst of this government shutdown with no signs of ending, well, President Trump has stopped several wars out there, and he's been trying to stop the biggest one of them all, right? Russia and Ukraine. And he hasn't had a lot of help from fellow companies and specifically the European Union in terms of sanctions to kind of put pressure on Russia. Well, the European Union has now changed that stance. They came out this morning, the European Union did, and they heaped more economic sanctions onto Russia. So now the European Union doing those sanctions to basically add to what President Trump has done here with those measures he put in on Monday against the Russian oil industry. That's how Russia is funding this wars through the oil side of things. That's why President Trump has been so hard on India with the trade talks because India buys Russian oil, right? So, Russian President Vladimir Putin, he did call specifically President Trump's move on Monday an unfriendly act that could backfire by spiking global oil prices. Was his response to President Trump's side of things. While the American and European sanctions that are now hitting Russia, well, they're intended as part of the bigger effort to choke off the revenue and supplies that fuel that invasion of Ukraine. If you cut off the oil sales from Moscow and Russia, they won't be able to fund that stuff out there, right? So, they're hoping that cutting off that and putting pressure on Russia with the oil sales, well, they're hoping that that'll basically make Putin come to the negotiation table to end the war between the two countries. I know President Zelensky's happy that the European Union is finally helping out with that. He came out and said that as well. But then Putin did acknowledge when he spoke to reporters over there in Moscow, Putin acknowledged that the serious U.S. sanctions will have certain consequences for Russia, but he kept maintaining that they will not significantly impact his economy. He's saying that at least publicly for those sanctions on Monday, but he, needs to address obviously and look at these European Union ones coming his way as well. And look, if China and India keep buying Russian oil, yeah, it's going to affect him if other people put sanctions on it. But those are big economies buying oil from him that can continue it happening. So that's coming out with hopefully the end of that war here coming up soon. And now we got a story from Fox Business, and this could give us some hope here as consumers in terms of prices of things, tariffs, etc. Yes, U.S. Treasury Secretary Scott Bessent. Well, hopefully what he said today is going to lead to optimism, right, and some confidence here for us consumers. He came out and he said he expects price relief to arrive sooner rather than later in terms of pricing on items, right? Here's his exact quote. This affordability crisis, we've gotten it under control. The first thing to getting it under control was stopping the Biden inflation. He went on to say that now that we've done that, energy prices are down. I think that housing prices are a lagging indicator, especially in rates. So I think we could see the CPI numbers start coming down next month and then the month after as well. And I got a mortgage story and housing story coming up for you here in just a couple stories away. So he's saying we're just a month or two away from prices starting to fall a little bit out there. Obviously, we've gotten no economic data here since the government shut down in early October. We are getting reportedly getting the CPI report tomorrow, but I don't know how much that report is going to be trusted because the Bureau of Labor Statistics isn't a skeleton staff for this reporting. Did they get enough feedback back from people in order to do a proper CPI reporting out there? So, well, that'll rile the markets tomorrow, depending on what comes out, whether it's believed or not. And it'll be our first government economic report since the government shutdown. We have gotten some private ones so far. Basically, the economists that are in this stuff, that pay attention to this stuff, what are they expecting tomorrow on that CPI report? Well, they're expecting a 3.1% increase year over year, which is about what it's been, for the last several months. It has ticked up over the last several months, but 3.1% is kind of right at where it has been. So not a big increase at least. But we do know there's been some private numbers here coming out amidst this government shutdown, right? Like that University of Michigan study. They said consumer sentiment was steady for October. So little change from September to October, I should say, right? It came in at 55. Economists polled by expectation levels, well, they estimated a slight decline to 54.2. Well, and then September's index were at 55.1. So we did see a decrease in October from September nominally, but everybody was expecting a little bit more of a decline coming that way. The survey's measure of consumer expectations for inflation, it fell over the next year, or at least the view of consumers' inflation over the next year, I should say. It fell, and it was at 4.6%. Well, it's been at 4.7% in September. So small change there, and it's a very high number and needs to come down. 5-year inflation expectations in that University of Michigan report, well, they were unchanged at 3.7% at that time. So people are expecting more inflation sooner and then coming down later on as well. So the Commerce Department, just refreshing your memory on some of this items here. The Commerce Department showed second quarter gross domestic product, the GDP, that it grew at an annualized rate of 3.8%. Percent has said also several tax changes have yet to fully be felt throughout the economy, from that big, beautiful bill that was passed, saying that's kind of working its way into the economy in terms of the tax side of things. He's saying that's going to start hitting next month as well, which is going to lead to the feeling of prices dropping. So whether you believe it or not, at least somebody's talking positive about the economy coming up now. We'll have to wait and see. And, one of the things he talked about was that lagging indicator of home sales mortgages. Well, we have some updates on that here today because existing home sales actually rose 1.5% last month from August. So it's in a seasonally adjusted annual rate of 4.06 million units, according to the National Association of Realtors. They put this report out this morning, and that's the fastest sales pace since February. Sales actually jumped 4.1% as well. So we're seeing housing start to move. Now, that's good news, but there's some caveats to it as well. Well, this latest sales figure did come in slightly below the 4.07 million pace economists were expecting as well. The national median sales price, well, it climbed 2.1% in September from the year earlier. Mortgage rates are coming down. People are starting to buy houses, but the prices are staying elevated out there, right? So the median sales price, 2.1% up in September. Well, that number is $415,200. The 27th consecutive month that home prices have risen on an annual basis. And it's the highest median sales price for any September on data going back to 1999. So house pricing staying elevated. And no matter what interest rates do, it's unaffordable for first-time home buyers, a lot of them. The U.S. housing market has been in this sales slump since 2022. We all know that's when mortgage rates began climbing from those historic low levels up to the levels we've seen, these high 7-8% levels. Sales of previously occupied U.S. homes, well, they were down last year to their lowest level in nearly 30 years. Mortgage rates, though, they started declining back in July. That was that lead up to the Federal Reserve's, where they cut its main interest rate for the first time in that year. And so we started seeing a drop then, right? So then home purchases last month likely went under contract in July and August. That was when the average rate on that 30-year mortgage ranged from 6.75 to 6.56 percentage points, according to Freddie Mac. The decline in mortgage rates, well, it accelerated in September and they continued through the October month. So it's pulling the average rate down this week to its lowest level in more than a year at this time. The lower rates are good, as I said. They boost home shoppers' purchasing powers. The problem is that the prices are way too high for a lot of people, right? You to qualify and be able to afford the to buy that home, with the based off the pricing is also before it was a dual attack, and now it's just pricing's higher as the mortgage rates are coming down as well. The U.S. medium home sales price, well, it's risen 53% over the past 6 years. And that was before the market superheated during those initial years of this pandemic. So that's a big increase here in housing prices. So if you want to know quantities on the market, well, 1.55 million unsold homes at the end of September. That was up 1.3% from August, up 14% from September of last year. That's according to the National Association of Realtors. The latest inventory snapshot matches a 5-year high, but it does remain well below the about 2 million homes for sale that was typical before the pandemic. So we're meeting, because the numbers were low for houses on sale, so we're seeing some 5-year high numbers, but it's still not up to pre-pandemic side of things just because we're working off low numbers before to get to that side. So kind of where we stand on the thing, and this economy isn't going to be jump started until people can afford to buy houses. People that have houses be able to upgrade, and then first time buyers will be able to buy into houses. That's when you'll see this economy really take off. And when will that be? I don't know. We got to kind of figure that out. And one thing I know for sure is, there's a lot of host of things, and now we got to talk about the U.S. national debt out there because it surpassed another historic milestone. It passed $38 trillion for the first time just this week. The federal government continues to rack up debt, and it's a sickening record-setting pace, folks. Wait till you hear this. This $38 trillion milestone, it comes a little over 2 months. 2 months it took us to go from $37 trillion to $38 trillion. Yes, it hit $37 trillion just in mid-August. Less than a year it's been since we hit $36 trillion number. $36 trillion was hit in December of last year, and we're up that much more in that short of a time frame. America's debt has grown rapidly over the last decade. The population's aging, which means people are going into Social Security, Medicare, which is driving those costs up. But obviously a big driver in the surging debt, well, it's all in those interest expenses incurred from servicing the federal debt. So it's the interest payments are killing us right now with interest rates high. That's one reason why you've seen President Trump call him too late Powell, etc., and says you're costing Americans trillions of dollars by keeping interest rates at that elevated level. That was the basis of what Trump was complaining about from him as well. So these higher interest rates to curb inflation, are just making the debt payments ridiculous levels also. The Nonpartisan Congressional Budget Office, that's that CBO, they projected that the national debt held by the public as well, which, by the way, that's an alternative measure preferred by economists in order to compare the size of the nation's debt to the economy in terms of the GDP, so that, there's two ways to look at it. Well, this number here is set to rise from about 100% of GDP here in 2025. It's expected to be at 120% of GDP by 2035. So that's one reason why interest rates coming down is a big deal to the government. Less interest payments out there because the interest payments are driving it up along with the older people, but it's mainly those interest payments. When you have $38 trillion in debt, your interest payments every month when your interest rate is 6, 7, 8% is a lot of money at that point. Now, I told you about this yesterday. I got kind of the follow up here for you. We talked yesterday about the H-1B. We got some of the information from the government on the requirements for that $100,000 fee and how it's hitting. Well, I told you yesterday, I saw the headline that Walmart halted bringing in individuals who require that H-1B temporary work visa, and they halted it because of that imposing of the $100,000 application fee. So this all comes from Bloomberg, and as I said, it kind of hit the headline yesterday. But the current guidelines, well, they affect corporate employees for Walmart, as who they bring in under that H-1B numbers. Government data shows that Walmart is the largest user of the H-1B visas among major retailers. I told you Amazon, was a big one at bringing them in as well. So Walmart, they bring in about 2,390 visa holders every year. The H-1B visa program allows employers to hire those foreign workers in specialty occupations, things that require specialty expertise. And you have to have at least a bachelor's degree, is the idea behind it going forward. H-1B workers, they do have temporary authorization to work in the U.S. The visa is renewable for a lot of time frames until they eventually say it's not renewable as well. So the H-1B, as we've talked about here at McCollum on Business, its original intent was to give employers access to talent that isn't available around the domestic workforce. And it's actually in the law that companies must certify that wages for H-1B employees, well, that they're comparable to those of similar U.S. workers. And what kind of the charge here is companies, especially tech companies, are bringing in people that aren't skilled workers and people that you can't find here. They're bringing in cheaper workers to come in with that H-1B visa, and that's kind of the crackdown that's happening right now out there in the world. So Walmart, being a major employer, is stopping H-1B visas from moving forward. And, there's a lot of consternation here in this market. We know that. We talk about layoffs all the time. Got a couple other ones here for you from big companies looking to restructure. First one, Molson Coors Beverage Company. They came out this week and they said it plans to eliminate about 400 jobs within their companies by the end of this year. It's part of a sweeping corporate restructuring plan, is how they phrased it. Those 400 people, that's about 9% of the company's salary workforce here in the Americas. Well, the reason why they're doing it, because alcohol companies across the U.S. are facing huge uncertainty, right? Slower consumer spending, people moving around away from alcoholic beverages into other items, but also tariff-driven volatilities, aluminum prices, shipping the raw materials in, etc. And then, as part of this restructuring, Molson Coors will reinvest in key categories within their company. So they're going to reinvest in its beer portfolio and premium mixers side of things. But they want to get more focus on the non alcoholic beverages and energy drinks as well. That is where the younger generations are buying things from. They're moving away from the alcoholic side into those items. And Molson Coors wants to kind of pivot that way as well. So, interesting enough, like they announced the 400 job cuts, but if you dig deeper into it, I found this side of it. Somebody had reported that those 400 job cuts actually include positions that were already vacant following other role prioritization efforts, meaning they move people around. So they're getting rid of jobs that just haven't been filled and workers aren't in there as well. But then they're also going to focus on workers who will accept voluntary severance packages as well from the company. Basically, retire a little bit early, right, out there. And I looked this up. As of December of last year, Molson Coors employed about 16,800 people globally. And I said this is specifically targeted toward the U.S. side of things. And another company doing some layoffs. And this one is not a shocker, being from the EV side of things. But Rivian Automotive doing another layoff rounds here as well. They reportedly plan to lay off more than 600 people. Well, they're growing market challenges and people not moving to EVs quick enough. Then the government subsidies going away as well. The Wall Street Journal first reported these plans. They said the layoffs will affect about 4% of the company's workers. Rivian had just under 15,000 employees at the end of 2024. Now, the CNBC did get confirmation of the layoffs from a source, and the source said additional details are set to be shared with employees today. A person spoke anonymously because the news has not been made public, which it will today, as those letters and emails will certainly be spread out. Rivian and other EV manufacturers are increasingly facing a very challenging market in that automotive field. As well, the Trump administration changing all the plans on EVs. That $7,500 federal incentive for purchasing an EV has now gone away. But then they have all the regulatory issues they have to deal with. But the biggest issue for these electric vehicle companies and companies like GM that build a lot of electric vehicles, well, it's just the slower than expected EV demand out there from us consumers. All right. The other problem Rivian has, and same thing Tesla had, they just came out with a couple new models or rebuild models of the current ones, is they just don't have a lot of new products coming out. Rivian has no new product line until next year, and they need a lot of cash, and they have a lot of earnings losses. For instance, Rivian lost $1.1 billion during the second quarter, according to their announcements and reporting. It's a lot of losses there and not being able to come out with new product lines that people want to buy. Rivian's vehicle sales did increase 32% units this year over year in the third quarter. And 32% equates to 13,201 vehicles in that time frame. And so did GM's electric vehicles, et cetera. And that was all because buyers were basically running to buy electric vehicles before that federal incentive expired at the end of September. But the company's Rivian specific 2025 delivery forecast, it's been narrowed by as many as 46,000 units is where they started at. It's been lowered down to 41,500, and between that and 43,500 vehicles. So big drop here for Rivian as this year has gone on. By the way, Rivian's having other issues back in August. They flagged a bigger adjusted core loss this year. They're expecting it to be between $2 and $2.25 billion. They expected it only to be $1.7 to $1.9 billion earlier in the year. So losing money galore here for Rivian, and fortunately is leaving some job losses as well. And when we come back here at McCollum on Business, we keep this Thursday edition going. Got a couple local stories coming up here. The Scottsdale Saguaros doing some money and giving some money away for some Banner Health, I believe it is, charities, and helping people without insurance getting medical care. We'll talk about ASU's new medical school as well. And then GM has some pretty advanced plans here coming up for hands-free driving and eyes-off-the-road driving for 2028. We'll tell you about. Come on back. It's McCollum on Business. And we're back here at McCollum on Business. You just saw the commercial for The Real Matrix, a show that my company out here, me, Kobe, Riley, Ethan's production company here, well, we got that out there. The Real Matrix joined the Angry Patriot, and episode 5, I believe, has Dale Hellestrey in it as well as the guest there. being talked to there by the Angry Patriot. Episode 5 is up here at Robat TV. Every Wednesday at noon is when the new episodes come out. Hit yesterday, and free podcast system as well for that. Just search The Real Matrix. It'll come right up on all your favorite podcast systems. Of course, it's on the free YouTube page for the shows that we produce here as well. Check that out. And of course, on demand here at Robat TV is The Real Matrix. You'll see the channel there for you every Wednesday at noon. The main event, no Uncle Lou today here on Normally joins us on Thursday. Well, Uncle Lou will join us tomorrow here on the program. Had to move it a day because he's traveling here today. Uncle Lou will join us tomorrow, but I got you through an hour and a half. Dale joined me at the beginning before he took off to his other stuff that he does on Thursdays, and that is up here at Robat TV on demand as well on YouTube here at Robat TV on the YouTube page, and of course, free podcast systems out there ready for your ears now if you don't catch us live here at Robat TV. This program, as soon as we wrap this up at Robat TV, up at YouTube as well, and then we got the Pit Stop Look Ahead show being recorded this afternoon. That'll be up here at Robat TV on demand, of course, on YouTube as well. Free podcast systems now available on all your favorite podcast systems. The Pit Stop Talk is where you can find it at. Follow them at the Pit Stop Talk as well on X out there for the social media side of things. Available on all systems now. We are one race away. After this weekend at Martinsville, we have the Championship 4 all set, and that happens here at Phoenix next week. Last year of the championship racing here in Phoenix before it moves to Miami Homestead Homestead Miami starting next year out there. So coming up here, man. So pay attention to the Pit Stop Look Ahead show. Of course, the Look Back show from last weekend's racing has been up since Monday. Tune into that either on YouTube, Robat TV, or the free podcast system. And if at a minimum, even if you don't like racing, just like and subscribe it for me so it can get out there with one more race. So we only have a couple more weeks of the Pit Stop before it takes its hiatus for the off season and comes back, of course, in February. And it's exciting to do that show and everything. Well, let's get into the Market Watch here. And the sell-offs that happened yesterday, there's been a nice rebound here today, and Dow Jones is up at 255 points right now. S&P 500's up to 46. Nasdaq's up 224 points, and then the Russell 2K, that small cap index, 35 points up right now for that. And then Bitcoin rebounding as well, although it is down from where we looked at it earlier today. It was in the 111,000 range, down to 110,520 today, but up from the 107,000 range that it was at yesterday there for Bitcoin. So Bitcoin's still out there, and cryptocurrencies have had a sell-off here over the last couple weeks, and Bitcoin's been affected by it, but it actually was not driven by Bitcoin. Some of those other cryptocurrencies were having sell-offs that was dragging down Bitcoin and those stocks. So we'll have to see if there's a rebound coming for Bitcoin anytime soon. And the first stock we're going to look at is a stock we've looked at a lot this week, Beyond Meat. That meme stock out there is the first one. You know, if you don't know Beyond Meat, well, they're a plant-based meat company. They're actually down right now, 13.55%. They were up about 3% earlier today. As you see, that's a crazy graph there. Looks kind of like the Matterhorn there at Disneyland. So this is all based around that speculative move here, right, with these meme stocks where it's been driven up 140% every day. Yesterday, it ended up at 112% up, and it was 140% earlier in the week and 130% earlier in the week as well. So we're seeing the sell-off happening right now, 13.41% here today. I just wanted to give you the update on that stock. We've seen huge growth in it, and no reason why, other than they announced they were doing a distribution deal with Walmart. Other than that, it's just a meme stock, and meme stocks just get driven up for no reason as people just want to kind of force it up. And there you go, going down today as well. West Pharmaceutical Services, medical equipment maker, is why we're paying attention to this stock here today. 11.87% up as the day has gone on. They raised their profit forecast, if I can talk. They did it on their better than expected third quarter results, and then they raised the profit forecast. They have benefited This company has solely benefited from supplying those GLP-1 drug makers with the components they need for the injector pens. And those GLP-1 medications are being sold like hotcakes right now. And so they're selling a lot of those components, and their profit has increased because of it for that company. And then last up, we're going to look at Las Vegas Sands out there. They're up 13.49% right now. And believe it or not, gambling stock, well, you would go, well, Las Vegas is doing that well. No, it's not. What is doing well for these guys, they posted strong third quarter earnings. A lot of the growth was because of Macau, China, and their Singapore investments are what are driving their profits up here in their third quarter as well in terms of their earnings. They reported $419 million in profit and adjusted earnings of 78 cents per share for the quarter. So gambling is strong for companies that have a Macau and Singapore investment. The United States side, I'm going to use the term dragging it down. It's not necessarily making it look negative, but it's not the strong point is the American gambling side of things. Before we get into, the stories we're talking about here, just really quick, because the companies are reporting left and right. T-Mobile was down over 5% earlier today. Their third quarter results were weaker than expected. Knight Swift Transportation was down today. They only earned 32 cents per share in the third quarter. Everybody wanted 37 cents there for them. Southwest Airlines were down over 7% earlier today. They posted a surprise profit in the latest quarter, but they're down about 7% earlier. They're doing that turnaround effort and bringing more premium services in. They said they expect unit revenue to rise between 1% and 3% for the fourth quarter, and they said their capacity is up over 6% over the same period last year for Southwest. So interesting dynamic there because their competitor, American Airlines reported as well. They were up 4% earlier today. I don't know what they are right now. They provided stronger than expected earnings as well, and they gave an upbeat guidance for them. Now, they lost 17 cents per share, but everybody thought they were going to lose 28 cents per share. So they did. They lost it, but they didn't lose as much as people thought they were going to as well. So just give you some ideas of everybody reporting out there that is happening right now because it's fast and furious. And don't forget, Ford's here coming up later on in the day. And the Scottsdale Saguaros, well, if you haven't heard of them, they're a charity organization. They raise funds for numerous children's charities throughout Phoenix. Well, they came out and they granted $250,000 to the Banner Health Foundation, and they're supporting the the Banner Children's Community Clinics is what it's called over in Mesa. I believe there's one in Tolleson as well, but they're also helping to support Banner's Children's Health Mobile. The Health Mobile brings free primary care to uninsured children here in the Valley. So good for the Scottsdale Saguaros, giving that check to them. And the reason why it's a good thing, obviously, health insurance and health care is a big deal, especially for children. There's more than 3,000 uninsured children are cared for at the two Banner Children's Community Clinics. 500 children, roughly, additional from that 3,000, well, they're seen by the Health Mobile that drives around to poorer neighborhoods and neighborhoods out of reach of health care. The clinics offer primary care, behavioral health screenings, specialty care referrals. They even do things like sports physicals. If you can't get into a doctor, can't afford a doctor to do that, and participate in sports as well. And so they do this all for family, young children, obviously. Most Banner Children's Community Clinics and Health Mobile patients, they come from families with low incomes who lack health insurance. They have limited access to transportation. And then a lot of the people that go into this as well, they prefer to communicate in their home languages, which a lot of times, in this case, is Spanish out there. So it's they go to them or they come to places that kind of support their needs as well. So the clinics see children who have had little or no previous primary care. So Scottsdale Saguaros giving a sizable check here to Banner Health there to support that side of things, and good cause there by them, and business made us aware of that donation and story. And now we got Arizona State University. I saw this all over X last night. Yeah, there's a new medical school starting for Arizona State University. I never had one before. Getting into that, Two major things happened yesterday for that medical school. One, and this isn't a surprise, they were expecting it. They received preliminary accreditation from the Liaison Committee on Medical Education. That's the LCME. And the other thing that they got, well, basically the accreditation means they can operate as a medical school, but they also got a nine-figure naming gift out there. That's the second largest gift in ASU's history. The school's going to be named the John Schufeld School of Medicine. Excuse me, John Schufeld School of Medicine and Medical Engineering. I don't know why I struggled to say that. But with that, so that obviously is being named with that gift, but also the accreditation means they can now begin recruiting its first class of students for 2026. Now, who is John Schufeld? Well, he's an emergency medicine physician. He founded the company NextCare. If you've seen those around here in Arizona and other states, if you've been to them, he grew that NextCare company from one clinic into a 60 location network across 6 states. So obviously successful in the medical side of things, and the John Schufeld School of Medicine and Medical Engineering. Well, they also have a partnership. We announced this before here at McCollum All Business with our primary clinical affiliate, Honor Health. Well, they're going to train students to blend multiple disciplines: medicine, engineering, technology, humanities as well. All that to create a new kind of healthcare leader with a strong sense of innovation and problem solving. Students will earn 2 degrees in 4 years. They'll get the MD and a Master of Science in Medical Engineering. It will be trained. Students will be trained to use tools such as AI and data science to transform healthcare. So the Schufeld School of Medicine and Medical Engineering, what a name. It's part of ASU Health. That includes the College of Nursing and also the Nursing and Health Innovation is the name of it, and also the College of Health Solutions. So the new School of Technology and Public Health will be part of that group as well. And then the ASU Health Observatory going to ASU. So big donation for naming rights and obviously getting that medical school off the ground. But more importantly, it's as important, the accreditation. New class coming in and recruiting here for 2026 coming up. And then my final story here, General Motors is behind the times in what we're about to talk about. Well, boy, are they excited about getting involved in it. General Motors, very old company, not like Rivian, not like Tesla in these fields. And General Motors has struggled with its expensive modernization efforts, including they put a lot of work into the EV side. They're taking a big hit this year as well, based off of those moves that they did. But they say they're planning to offer Americans hand-free driving and the freedom to watch a movie, do work, send emails, all while your car is driving you out there, right? So it sounds like a Waymo, for instance, right? The company unveiled new eyes-off driving technology. They say it's going to be available starting in 2028. It's part of a new technology initiative revealed by the GM executives. They did all this yesterday in New York. The GM basically said that the initiative includes a conventional AI technology that will be introduced into vehicles next year. So in 3 years, GM is promising us an eyes-off driving experience. And they're saying in 3 years, it'll be available in the Cadillac Escalade IQ SUV was the first car that it'll come out in. The technology obviously is new to GM, but it's not new. They're not the first car company to release this type of technology. We know Tesla does it. We know Waymo has it. We know Stellantis also has it as well, driverless cars on the road. So even Mercedes-Benz, Volkswagen, they have conversational AI capabilities, along with Stellantis has that as well. So GM isn't doing anything new in terms of this. I mean, there'll probably be some new elements into it, but GM is the newest one to get into this. And they're promising it to us in 3 years, folks, for GM. And I dream of that day where my car, I don't want a Waymo. I want my car that I buy to just chauffeur me places. That'd be fantastic. I don't want to rent a car. I don't want to pay for a Waymo. I don't want Uber doing it. I want my car that I own to take me places. That'd be fantastic. Can't wait for that. Just on my way into the studio here, I can just prep for the shows, put the shows together, and relax on my 40-minute drive in here to the studios, right? That'd be fun. Hey, folks, appreciate you joining me here on McCollum on Business Thursday edition. We'll be back tomorrow, 11 o'clock live, and of course, on demand. Don't forget, YouTube as well as Robat TV. Come and join us tomorrow, would you? Don't forget, Pit Stop coming up here shortly as well. Look Ahead show. We'll see you tomorrow, everybody. Have a great Thursday night.